Crypto is getting its first meaningful pullback after a couple of weeks of up only. Is it cause for concern? Is the relief rally over? Is the bull market cancelled? These are questions that you may have. And should you be buying the dip? Well, we're going to cover this and a whole lot more today. So stay tuned and let's get straight into it. Going on to the calendar, one reason for the sell-off is possibly because people are de-risking ahead of today's US FOMC meeting minutes, which is taking place at 9 p.m. US time. So do keep an eye out on that. Mark it off on your calendar. This is bound to cause volatility within the market and at least a little bit of de-risking ahead of that. S&P 500 has pulled back, which is part of the cause for crypto, and Bitcoin rejected off of an important key level. But is it just a minor pullback before it's going to mount an assault back through that resistance area? Well, we'll cover all of that. One way that I think you can look at this is take a look at what happened with Coinbase. So Coinbase was green after the hours on the earnings report, which came out yesterday. So that is one positive sign. And if you want to look at it as potentially some sort of a correlation, it could potentially be an indication that maybe we will have one more squeeze towards the upside. And Kaleo says it well over here. He says a reminder that coin earnings released today, which we now know the results of that, should see some pretty decent volatility. And he said a bold take. I see coin gapping up no more than mid-70s, but cooling off a little bit when the market opens tomorrow. And we could see BTC possibly move as high as 26K along with it, but probably also pullbacks a bit and then chops around between 25 and 26 before making the run up to 30. And that is a pretty bold claim, but it is in line with what I have been looking at mostly from a liquidity perspective, to grab the liquidity around that $26,500 zone and then potentially come back into the range, or maybe make one more push to 28K and then we reassess from there whether this is the start of a new run or if that is the end of the relief rally. But could the relief rally already be over? Well, stay tuned and we'll cover that in the chart. So there you have it. DB outlines that Coinbase jumped up 7% on their revenue beat. And I think this is definitely how hodlers are feeling right now. Maslow's hierarchy of needs, as seen by a crypto hodler. Right at the bottom, we have the bull market, which marks the bottom and the base of the pyramid. I think that is how a lot of people are feeling. But in all seriousness, we also do need to look at what's going on with different correlations within the market. So if you have a look over here by FX Hedge, you can see Hong Kong are supposedly to hand out 5,000 Hong Kong dollars, which is about $637 consumption vouchers, which is their own version of those checks, the stimulus checks that the US received. And we know how that went. We've been covering this now for a couple of days, that this injection of new liquidity into the market could potentially cause a little bit of a run. Maybe not a healthy run in the long run, but nevertheless, there could still be further upside. And TED Talks has also shown over here that Bitcoin is becoming increasingly correlated with Chinese stocks, which are entering into a bull market. I would say take this with caution because it is a very short-term time horizon that he's looking at here. I mean, this is a 1-hour chart, but nevertheless, there is a little bit of a correlation that's currently forming. And I think it's going to become a bit of a meme over here because now Will Clement has jumped onto that. And he says Bitcoin's daily correlation to the S&P 500 flipping negative for the very first time since the FTX collapse. So here you have the FTX collapse, and then this is the current little bit of negative, which we also experienced near the bottom, the previous bottom that we had in late June, just before that July marking over there. So is this something that we should focus on? Well, in my opinion, you need to look at correlations over much longer periods of time. I think it's something that you need to focus on for many, many months. And I can't say that it's decoupling yet. Although when you do look at the S&P 500 over here, Bitcoin held up very, very well yesterday. All things considered, if you look at this massive sell-off in the stock market, remember I told you yesterday, be careful. If the S&P 500 is going to sell off, because crypto is a higher beta asset class, it's probably going to trade at about a factor of 5 times quicker to either the up or the downside. And it actually held up relatively well. So you would expect that Bitcoin would already have been down around $20,000 considering such a big sell-off in the S&P 500. So you need to now be very, very careful with your trades and the way that you're placing them. And I'm going to show you again the dollar cost average strategy. I think it's just the most golden thing that you can do right now to minimize your risk. in these current environments. And I like what James Bull says over here. He says today was the largest daily loss in the stock market this year, yet Bitcoin didn't move one bit. Let's see what happens tomorrow. If the S&P 500 pumps back, then we could see Bitcoin break the 25K, which is that major resistance zone. And I agree with that. If Bitcoin has not sold off after yesterday and the S&P 500 bounces from its key level, which is currently at, I'll show you on the charts just now, then you could potentially have the makings of a big squeeze. And then you can have that short squeeze where you capture that liquidity around 26,500, which is where most of the liquidation levels are on the charts for those who have gone short. So they'll need to cover those positions. Okay, so here we have it. The weekly chart, very simple, straight horizontal line here, marks off the wick that we had from May 2022, marks off the wick from August in 2022, and then the second week that we've attempted to get through that level and we've rejected, the wick doesn't even get slightly above there. But as mentioned, you've had a lot of time to short this. Liquidity is strong up here, meaning that is an opportunity for price to gravitate towards that zone. The question is, how far do we come down from here first? Well, if you're viewing this purely on a weekly time frame, you can see like a sore thumb, this obvious area. You don't want to see prices fall below those candles over there. If prices start to come down below those candles, then you can say with certainty, this is going to be an enormous bull trap. And this is all a massive range. So you have the range lows over here, you have the range highs over here, and you can say with conviction that that's a massive range, and price is probably going to go all the way back down towards the range lows, which is around that 18K level. Now ask yourself, what would that mean for altcoins? Of course, altcoins would suffer, especially since Bitcoin dominance is still holding above the mid-range, and its next target would be the range high. So altcoins would suffer immensely in that type of environment. Looking at the Bollinger Bands, you can use the Bollinger Bands to both gauge volatility as well as the potential range. So Bollinger Bands have been relatively tight. You can see also the BBW, the Bitcoin volatility divided by the VIX has been contracted to extremely low levels, again, implying that a big move could commence when you eventually break out of the major range. So using the Bollinger Bands, if there's a strong rejection from here, the middle Bollinger Band would be the next target, which is coming in around that 19,400. This is only if you're trading Bollinger Bands and you're looking at things from a high time frame perspective. Remember, if it were to lose that level and come all the way down, we previously outlined on a previous show, I don't want to get into too much bearish stuff, but just to outline again, the possibility of the low Bollinger Band being tagged, which is much lower. As you can see, it's currently sitting at 13,756, which is much lower than the previous low that we had. So the only way that I see this panning out is if that Wyckoff accumulation phase were to play out, whereby you have your secondary test, right? So remember, you had the ST phase, so it's this one over here, this one over here, price comes up, and then you have the secondary test into that Bollinger Band, and then that's a big shakeout, and then obviously prices go up from there. So that's kind of the bearish case, just to keep in the back of your mind. It's not the main focus right now because we're still very far away from that. I'm just mapping it out for you for a future possibility. Okay, price has come back below that 50 MA on the weekly chart, so that is not a good sign. As long as it can reclaim that very quickly and continue to consolidate within this area, I would still beat the drum to the same tune, which is that the longer you can consolidate around here, the higher the probability is that you get a breakout. I would personally like to see, and the market doesn't need to do what I want it to do, by the way, and won't do what I want it to do. But personally, I would love to see a breakout and a liquidity grab like we described yesterday, and then for that to come back down and then have a more meaningful pullback in the coming weeks, and then have a clean break at a later stage. That's what I'd personally like to see for the health of the market, as opposed to just straight up from here to 30K with no real breaks. Dollar cost averaging. Here's the bots that I have. Remember, I've shown you the bots. I have 1-year portfolios, and then I have different recurring buys based on a portfolio split between layer ones, layer twos, and then also gaming, meme, and then decentralized finance coins, which are over here. So my risk is very, very limited over here, which is why I do recommend that you consider doing something like this. I'm using OKX to set up my bots. I have it under the recurring buy bots. And through that, you can set up a whole series of different coin lists and set your parameters as you will. Do you want to invest every 4 hours, 8 hours, 12 hours, 1 day, every 3 days, on a Monday, once a month, once a week, for et cetera, et cetera? You can determine the parameters. Now, if you look at this, my biggest drawdown is on the DeFi one at the moment with minus 4.86%. But I want to be clear over here. Remember, I am dollar cost. I didn't dollar cost average the whole amount in one go. I didn't throw it all in one go, which means I haven't lost 5% of my entire portfolio. This is how you mitigate the risk and reduce the risk completely. So let's say, for example, I wanted to take a trade into DeFi protocols with $30,000. Instead of putting all $30,000 in, I instead say, well, I think that if price is going to correct, which is highly probable, that correction will play out over the course of 1 month. Therefore, let's take the $30,000 and dollar cost average it into DeFi protocols over the course of 1 month. So the same trade that I originally wanted to take, because it's a good dose of, I don't really know what's going to happen in the market right now. It could be up or down because you had a pivotal point, right? Anytime the market's at a pivotal point, at a key level of resistance with the potential of a trend developing, meaning that you're not going to be in a range any longer, then you need to reduce your risk. And this is one way to reduce the risk. So minus 4.86% is the worst of these portfolios drawdown. And in relation to the total, or excuse me, it's this one over here, 5% on the gaming ones. In relation to the total that I'm entering into these coins over the course of 1 month, this is probably a 0.01% drawdown in relation to the total size that I'm entering. So do keep that in mind. I hope that makes sense. Please let me know in the comments if that does make sense. If it does make sense as well, smash the like button over here. Give the video a couple of likes so that we can get the algorithm running and it can get out to more people. So if you do want that, by the way, OKX does have a sign-up promotion over here where you can get up to $10,000 in their mystery box. You need to download the app on your phone. You get a mystery box, shake it, and it gives you a reward. Use the link below so that you can get that reward. In other news, the Bitcoin hash rate is continuing to rise over here. So it's pushing higher and higher. And Joe says that miners are going to the ends of the earth in all shapes and sizes and sourcing the cheapest energy waste on and off electrical grids. The demand for immutable scarcity will continue to soar. Now, typically when you see the hash rate tick up above the price action like you have over here, then that is usually what precedes a bigger run. And you can also use this indicator over here, which is the hash ribbons by Capriol Investments. Now, it's only failed 2 times. What this typically says over here, let's just zoom out. I marked a cross over there, the big X. So once you receive a buy signal, then every single time ever, except for these 2 occasions, which were both black swan events, this one over here is COVID, and this one over here was the FTX collapse. Every single time that you receive the blue buy signal, price never, ever, ever revisited the previous low that happened before that. So do keep that in mind. The only times was twice, which was COVID, unforeseen by everybody, and then FTX. So technically speaking, according to this, and this is based on on-chain metrics and the mining hash rates, typically, and what was meant to have happened was this was actually meant to be the bottom, according to on-chain, 18th of June. But because of FTX, we obviously had a forced sell-off a little bit further, mass liquidations, and we then got another buy signal over here, which happened on the 14th of January. And you can see price rallied into that. And pretty much that means that these lows should hold. That's all that I'm trying to show you over here. According to this indicator, these lows should hold over here. So even if price does come back down into this and you were to treat this as a range, so I'm sure you can all see the range. Let's just quickly draw a box around here. Let's say this is the main range. This area over here. Let's put this normal box. There we go. Let's say this is the range. Price is coming back into the range. Expect that there could be potential support at the mid-range. Worst case scenarios, you revisit the range lows. And either way, even if you do revisit the range lows, according to this signal, you shouldn't breach that. And it has a pretty high hit rate. So check that out. It's free. It's free to use if you do want to check that indicator. But in order for the market to be healthy, a couple of things need to happen. One of which has been outlined over here by Lucas. He says that Bitcoin, so the total amount of stable coins in circulation, is falling all the time. At the same time, the price is going up. This is another unhealthy divergence that complements those seen on the daily chart. So you typically want to see the stablecoin supply start to increase, but you're seeing a decrease. You know that we had the thing with Paxos and BUSD, where I actually read today that I think it's from next year that basically business is over in that regard. They're not going to be issuing BUSD anymore. They can't back it. So we need to see the stablecoin industry mature as well. This is an important thing. We need to see the potential maturation of DeFi stablecoins within the market in order to get a healthy uptrend for these stablecoins to get all ducks in a row and for the market to properly run, which is why we're still treating it as a relief rally until proven otherwise. Bear market relief rally and not an actual bull run. Okay, S&P 500, again, as mentioned, one of the worst closes of the year. The S&P got minus 2%, NASDAQ minus 2.45%, and the Dow was minus 2.05%. So here we have it. These are the key levels. I just want to note, for those of you who have been watching the last couple of days, I moved the top of the range down because it had a better line of fit over here. I'd drawn this many, many months ago as a range. The previous range was in this area. So I had it marked over here with the tops, and then that was the underside test, and I was looking for potential range high within that region. This is now the line of best fit since we have a confirmed local top over here. I've now drawn the range high over there and just slightly adjusted everything. So mid-range has been moved down slightly. Range low is still in exactly the same place. And then we have the 0.75. Okay, zooming in. The point is that price is still at a key level regardless. We have the momentum trend line over here. So we wick directly into that. And currently the market is attempting to turn green on the futures. Let's zoom in on that. So if the stock market can bounce from this level, expect that there could be a big uptick in crypto, especially if it reclaims that 0.75 level. Then same thing, we retarget back towards the range high and a break of this. And of course, price can move higher. But if you start to lose this trend, then you're going to move all the way back down to the mid-range, which is still another 2.48% down. If that were to happen today, you would have 2 days in a row that are catastrophic for the stock market. These are big moves, by the way, for the stock market. These guys are trading with anywhere from 300 to 1,000x leverage. So you can imagine huge moves to the downside. You would want to see it bounce from this level. So do keep that in mind. If you do want to trade the traditional markets and you have no experience, one way that you can do it is I've been test running this guy, King of Price Action, on Prime XBT. He has been making me profit. Sometimes he has drawdown. Sometimes he breaks back into profit. I'm just letting it run. For the most part, I'm going to give him about 3 months and see what he can do. There is a link in the description below if you do want to check out Prime, and they also have sign-up bonuses there. We've been talking about the VIX for a long time. VIX had squeezed into this area. Look at how long it's spent within this lower region in the teens, so under 20, basically. Anything under 20 consolidating like that usually is like a spring. It's contracting and getting ready to prepare for the next major move. We now had a spike up. If this spike continues towards the upside, a rising VIX is a declining stock market, which means that there will be a lot of pressure on risk on assets, regardless of what Hong Kong and China and all of them are doing. If they're giving out stimulus checks, it will still provide a decent amount of pressure. So the market is in a pivotal point. It's a difficult place to trade at the moment. It's debatable of whether we're breaking back into a broader range or whether we're establishing a new trend. You'll see that the opinions are divided half and half within the marketplace, and therefore you need to have a plan and, again, calculate your risk. It's all about risk management, guys. When I used to hear this, I used to always be like, I never understand. What do you guys mean it's about risk management? Risk management, risk management, risk management. You hear it a lot. it's kind of like, imagine you had a whole bunch of beans. You can't bet all those beans in one go. It's about how many beans you can grow out of the small amount of beans that you have. So you need to be careful with your trades. You don't want to bet too big. That's what risk management essentially is not getting too greedy, but also not playing so small that you can't make any money. So you need to find the fine line based on your lifestyle, based on where you are in life, if you have a family, how old you are, how much money you earn. These are all important factors. So it depends from person to person. Find the sweet spot for yourself and understand how much you can enter into the market and what your time horizon is. Okay, Bitcoin dominance, as mentioned, consolidating around that mid-range level. Still, same thing as the market. Pivotal point: if the Bitcoin dominance rises to the upside, altcoins are going to suffer. If it falls down, your next level of interest is around that 42% level, which means that altcoins will catch a big bid. Total 3. We've mentioned this. I told you be careful on your altcoin trades. If you have profits, take the profits, because it's still in an undeniable downtrend and clearly breaking back into the range. So let's see you can draw a very simple trend line over here. Let's see if that trend breaks. Another thing that I want to mention about trends, guys, what is the point of a trend line? So if you have a trend line over here, some would say that's wrong, right? Some would say that you should put it over here. The point of a trend line is to gauge the overall direction of the trend. That's the message that I'm trying to give you over here. So you don't need to have it in an absolutely perfect spot. It just signifies the momentum of the trend. And as you can see, the trend is currently trending towards the upside. On the daily, we do have higher highs, and then we have a higher low. We have a new higher high. Now you'd be looking for a new higher low to potentially be set. Failure to set a new higher low would confirm that price is moving back into a range and we continue to be range bound, which is entirely possible, right? So let's take a look at the price action over here. If we grab this, let's actually grab the highlighter. It's going to be much quicker. You can see a very, very clear range, right? This is a clear range. So if you lose the higher low, all that's going to happen, this is the higher low over here. If you lose that level, you have confirmation everything is moving back into the trend. You don't want to see that level lost. Also, you don't want to see that level lost because those are important EMAs. We have over here the 200 exponential moving average, which we had a perfect wick off. And I back tested all of this for you guys using the 5200 MA and the EMA strategy. And the results are usually towards the upside for much, much further upside, at least towards that 30K level. So this signal would fail. If price breaks below these levels, you lose this trend line, start to pay attention. Then you're looking at that moving average, which is the 200 exponential on the daily chart. A loss of that means you're obviously going to break below the higher low, and then you now have a new lower low, which means that trend trading is pretty much useless over here. No point in looking at the higher highs and high lows. Just treat it as a range, because we're going to be range bound again for probably a few more months. So that's what I'm watching over there. What I would like to see is the key monthly level hold. Here is the key monthly level currently where price is at right now. It's been wicking off of that zone. This area needs to hold as support. If this area can hold as support, then potentially get that one more spike up, and then we reevaluate from there. So what would that look like? From here to the potential target is 10% more for Bitcoin. Altcoins are going to be, they're going to go crazy depending on which one you're trading, anywhere between 20 and 30%, I would say. Okay, here is our broader range that we're looking at. These are all the different Monday lows, highs, previous week mid-ranges, etc., that have been lined out. Currently, Bitcoin on the 12-hour chart has come almost directly into the Monday low. You don't really want to see price even tick below that Monday low. If it does, it increases the probability that you're going to target back down towards this previous week low, or excuse me, the previous week's mid-range. And a loss of that means that you're now threatening the lows, which I just told you don't want to break below. That is coming in at exactly the exact price is, just 1 second, there we go, 21,373. On a closing basis, it's at 21,500 zone. Once you lose that level, pretty much the bullish case goes off the table. And like I showed you guys yesterday, was it on this chart over here? Like I showed you yesterday, once you lose that level, this would be a mean rejection, and the prices that you're going to be looking at are going to be much, much lower. First target is the range low. And after that, if you break that, then the Bitcoin hash ribbons indicator starts to fail once again, and then it just becomes another meme like the stock to flow model, and then you can start to look at much, much lower prices. So you got to take each day as it comes. I know it's quite difficult to trade at the moment. My strategy is this. I told you I'm dollar cost averaging into this region. I will start to cut those dollar cost average positions if prices lose that 21,500. Remember, my main entries, I was entering already and taking longs from as low as that 16K region. I re-added when we're consolidating against that 19K zone, and I said we're going to have a breakout. So around this zone over here, 18.8, and then we had the breakout. And then I only re-added my main portfolio in at this 21.5 was my exact entry point. So I'll be looking to stop out over here. If price gets around there, I'll stop out at profit. I had already taken a little bit of profits, which I was planning on re-adding down here. So net, I'll come out slightly positive. Keep in mind that there's going to be a lot of stops over here from the 16K buys. Remember, there are definitely some people that were bidding over here. Those people would be raising their stop loss throughout. And I would say the most obvious place right now is between here and between here. If that level gets taken out, you might see a quick spike down, which is going to be breaking price back into the range. But currently, as a swing trader, which is my main trading style, as a swing trader, I like to hold positions for weeks to months. As a swing trader, same way that I bid this zone over here, I will be looking to buy here. If price can get down to 22,600, I'm looking to buy that zone. And the reason why is because if this is a trend and we're breaking out of the range, you can see the range clearly, right? You can see the range high, you can see the mid-range, and you can see the range low. If this is a true trend that's establishing, the breakout will be quite big. Then you expect this. So up, higher high, higher low, higher high. Then you expect one more shakeout, higher low, and then probably a big breakout, which could very quickly get to, I told you, the spike up would be violent to 28 to 30K. I don't think you'll be able to bid it once it comes through. It's going to happen too quick. So I'm making preparations for that now, and I'm willing to stop out with minor profit or at the worst case, break even. If you followed along with my exact plan, then that's kind of the strategy, is to bid slowly into this region. How do you bid into this region? Let's go back and I'll show you. Where's that replay tool? Okay, let's go to this level over here. So if you look at this, I'm going to move it onto a low time frame. If you look at this, you want to see price action trend changing. So there, we came into that level expecting a move from that zone. You want to look for candles that look like they're reversing. This is moving too quick. There we go. Okay, so already that is now starting to look like it's probably going to be a bottom based on the way that the candle is shaped, based on the reclaim back into the overall trend over here. And then you have your confirmation once you break above this zone, you can say with certainty. So you could be bidding here with a stop loss below. Let's see what happens next. So it's holding, big spike down. Look at the volume on that. Still holds. Stop loss would still be holding. And that's it. There you go. That's basically how I entered. I always watch the way that price action is reacting over here. And you need to take the risk, right? You have to take the risk when you see price doing something like that. So I'll be looking for something similar if prices get to these levels. So here we have it. Let's see. Let it play out. If prices can get back down to these zones over here, I'll be looking for a trade setup based on what the chart pattern or the candlesticks are printing, and try and find a potential entry around here. So this one also looked like it was going to be a potential reversal candle, but we were coming into major resistance. Okay, let's speed it up. Okay, and that's where we're currently at. That's where we're at on price action. All right, this chart is more or less the same. I guess I mostly want to just focus on the volatility over here. Let's look on the daily chart. Okay, volatility is now contracting. So the expansive move was towards the upside, indicating that the move should obviously continue. So this is essentially when it squeezes back down over here, it's indicative of a corrective pattern. It's not indicative necessarily of an entire trend change. It's a real tongue twister. You expect the trend changes to take place off of low volatility, which is what you see at the bottom, which means that I would be treating the pullback as an opportunity to potentially add to my long position. I personally am not panicking yet. The 4 hour looks more or less the same. That's it, guys. I think that's pretty much the end. Let's have a look over here quickly at the momentum oscillators. These will be turning back over, but once you get to extremes, if you are establishing a new trending move, I expect most of the move to happen when these momentum oscillators or the stochastic RSI is in those extreme conditions. But obviously be careful if you start to get a confirmed breakdown and you get back into these main zones, then it is cause for concern. The 4 hour is near the bottom. Not much that you can tell from these. You have to know how to use these. It's not very useful for me at this exact moment. Okay, guys, I think that almost brings us to the end. I do have one more thing to say, and that is we have still, how many days left? 8 days left for the Rolex competition. Rand has been giving them away on his show. Make sure that you enter. To enter, all you need to do is go to the link in the description below, click on Bybit or BitGet, sign up, take a trade over there. If you haven't taken a trade, it can be as low as $1. That will get you an entry into the competition, and hopefully somebody claims it. You don't need to necessarily sit and watch the entire show live. Don't tell him that I've said that. But you can fast forward to the sections if you're somebody that's pressed for time, because where he's giving away the watch, because you have 5 hours to claim it. That's the important part. You have 5 hours to claim the watch. So if you don't claim it within the 5 hours, it goes through to the next person. And that's it, guys. Give the video a like, hit the bell notification, and subscribe to the channel. And I will see everybody on tomorrow's show. Have an absolutely stellar day. Cheers for now.